Welcome back. If you're new here, this channel is about protecting and growing your wealth with real, verifiable market data. No hype, no pump, just facts. And today, the facts are absolutely wild. Before I break everything down, drop a like on this video right now. It helps more Americans find this content when they need it most. And hit that subscribe button because the silver story for 2026 is just getting started. Here is our agenda for today. First, we'll cover the current silver price, what happened, and why it matters. Second, we go deep into the vault drain, the COMEX data that Wall Street does not want you talking about. Third, I'm going to expose the Jane Street situation in full detail. And fourth, we'll look at what the biggest banks on the planet are projecting for silver prices in 2026. Let's go. All right, let's set the scene with hard numbers. As of this morning, March 6, 2026, silver is trading at approximately $82.80 per troy ounce, down over 1% just in today's session alone. Now that number by itself might not seem dramatic, but let me give you the full context, because context is everything in this market. Let's rewind 14 months. At the start of 2025, silver was sitting at $28.92 an ounce. Yes, $28.92. Fast forward to December 31st, 2025, and silver had closed at over $72 per ounce. That is a 147% gain in a single calendar year, the largest annual gain in silver's recorded history. Silver outpaced gold, outpaced Bitcoin for most of the year, outpaced the S&P 500, and outpaced almost every major asset class on the planet in 2025. But wait, it didn't stop there. 2026 opened, and silver kept running. By mid to late January 2026, silver futures had rocketed past $100 per ounce, a milestone that the silver community had been calling for years. At its January peak, silver hit as high as $114 per troy ounce. If you had bought silver at the start of 2025 at $28.92 and held it to that January 2026 high, your return would have been close to 295%, nearly triple your money in just over a year. So why are we sitting at $82 today? What happened? January 30th, 2026, a day that silver investors will not forget for a very long time. According to the Wall Street Journal, silver prices crashed 31.4% in a single session, making it the second worst single-day percentage loss for silver on record, with the worst going all the way back to 1980. What triggered a 31% single-day collapse? One name, Kevin Warsh. President Trump announced on January 30th that he was nominating Kevin Warsh as the next chair of the Federal Reserve. Warsh is known as a monetary hawk, someone who favors higher interest rates, a strong dollar, and tighter monetary policy. The market immediately read this as higher rates for longer, a stronger US dollar, and therefore less reason to hold hard assets like gold and silver. The dollar surged, silver cratered, gold dropped over 10% the same day. It was absolute carnage in the precious metals space. But here's the critical thing I need you to understand. And this is where the story gets really interesting. Silver didn't go back to $28. Silver didn't go back to $40. Silver pulled back to the 78, 82 range, found support, and has been trading right around that $82 level ever since. Even at $82, silver is still up nearly 190% year over year from where it was in March of 2025. The gold to silver ratio today stands at 62.1. That means it takes 62 ounces of silver to buy just 1 ounce of gold. For context, gold right now is at over $5,154 per ounce. At the height of the early 2026 silver squeeze, that ratio was touching 100 to 1, an extreme rarity in modern markets. The compression of that ratio from 100 back towards 62 is itself a story of massive value re-rating happening in real time. So where does that leave us? Silver is in a pullback, it is weakened. But the structural story, the reason silver ran in the first place, has not gone away. In fact, it's getting stronger. And nowhere is that more visible than in what is happening to the physical vaults right now. This segment is arguably the most important part of today's video, because while the paper price of silver has pulled back, the physical market is telling a completely different story, and you need to understand the difference. Let me explain how this works. The COMEX, the Commodity Exchange in New York, is the primary marketplace where silver futures contracts are traded in the United States. When institutions, traders, or major buyers want physical silver delivered, they pull it from what are called COMEX registered stocks. These are the bars sitting in COMEX approved warehouses that are ready and available for delivery. This is the number you need to watch, not the futures price, the registered stocks, because this tells you how much physical silver is actually backing the paper system, and what those numbers are showing right now should make every silver investor's jaw drop. Let's go through the timeline. Back in September of 2025, just about 6 months ago, COMEX registered silver inventories stood at approximately 200 million ounces. That's 200 million ounces of physical silver sitting in vaults, ready for delivery. By late January 2026, according to the COMEX letter, registered stocks had plummeted to approximately 30 to 35 million ounces, a drop of over 165 million ounces in roughly 4 months. Then LiveMint reported in late February 2026 that COMEX silver inventories had fallen below the critical 90 million ounce threshold in total registered stocks, with the number down to just 86,130,399 ounces, a multi-year low. Let me give you one more data point that brought the silver community to its feet. On February 11, 2026, a single day negative adjustment of 356,882 ounces was recorded in the COMEX registered silver category, over 3.2 million ounces, gone in one day. In January alone, 50 million ounces left COMEX vaults, 50 million ounces in 30 days. To put that in perspective, the Silver Institute projects that the global silver mine supply for all of 2026 will be approximately 1.05 billion ounces. That's for an entire year. In just 1 month, January 2026, the equivalent of roughly 5% of the entire world's annual mine production walked out of COMEX warehouses. Now the bears will tell you, and Seeking Alpha published an article arguing exactly this, that COMEX inventories won't be running out because the total eligible stocks are still much larger and the COMEX won't default. I want to be fair and acknowledge that perspective exists. The full COMEX warehouse system, including eligible stocks that aren't immediately available for delivery, stands at 366.25 million ounces as of late February, down 31% from 532 million ounces just months earlier. But here's the thing, it's the registered stocks, the silver actually cleared for immediate delivery, that matters when demand spikes, and that number has gone from 200 million down to approximately 86 million ounces. That is a 57% decline in available for delivery silver at COMEX in approximately 6 months. You cannot spin that as a nothing burger. And it's not just New York, it's Shanghai too. Silver inventories at the Shanghai Futures Exchange have also been hitting multi-year lows simultaneously with the COMEX drain. That means East and West are drawing down physical silver at the same time. Shanghai silver premiums were running $10 above Western spot market prices, a massive divergence that signals one thing: extreme physical tightness in Asia. Now, who is taking this silver out of the vaults? Why is this happening? 3 primary forces. Number 1, industrial demand is absolutely insatiable right now. Number 2, the tariff trade. Number 3, investment demand. The Silver Institute, the global authority on silver market data, has confirmed that 2026 is expected to be the 6th consecutive year of a structural supply deficit in the silver market. Their forecast is a 67 million ounce deficit for 2026 alone, and that's just 1 year. The cumulative deficit since 2021 is projected to exceed 947 million ounces by end of 2026. You heard that right, nearly 1 billion ounces of cumulative silver deficit, and global above-ground stockpiles are being depleted to bridge that gap. That is the real story behind why millions of ounces are leaving vaults, and why the physical market is tightening even as the paper price pulls back to $82. Before I wrap up, I want to give you some practical framing. Again, not financial advice. I am not your financial advisor, but here is the context that might help you think through your own position. Number 1, understand what you own. Number 2, dollar cost averaging is a legitimate strategy in a volatile market. Number 3, watch the COMEX data. Number 4, watch the gold to silver ratio. Number 5, follow the institutions, don't fight them. All right, let me bring it all home for you. Silver is at $82.80 per ounce, down from its January 2026 peak of $114, but still up nearly 190% year over year. Tens of millions of ounces of physical silver are leaving COMEX vaults at an unprecedented pace. Jane Street has built a $1.3 to $1.6 billion position in the SLV Silver ETF, becoming the single largest institutional holder. The Silver Institute confirms 2026 will be the 6th straight year of a silver supply deficit, and the big banks are split. JP Morgan forecasts $81 average for the year, while Bank of America has a target range of $135 to $309 per ounce by end of 2026. The silver market in 2026 is unlike anything we have seen in a generation. The physical fundamentals say one thing, the paper market says another, and somewhere in between the truth and the opportunity lies waiting. If you found this video valuable, like it, share it with every single person in your circle who owns silver or is thinking about it. Leave a comment below. Tell me, are you bullish or bearish on silver from here? And subscribe if you haven't already, because we are going to be tracking every single development in this silver market in real time. I'll see you in the next one. Stay sharp, stay informed, and whatever you do, always protect yourself first.